Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in, remember to smash the like, ring my bell, hit subscribe, and leave a comment in the YouTube section when you find value in this video. Appreciate your time. Let's dig in and take a look at the chart. Here we have Coinalyze on the 4-hour time frame. What we have seen here is that Bitcoin continues to take a dive, and it's currently at 39.6K, and it's dipped as low as 39 point, I believe 0.6 or 0.4, depending on which exchange you're looking at. Open interest continues to slide on the coin-backed, stable coin-backed, and also coin-backed. Coin-backed is BTC, Ethereum, etc. What we have here on the funding rate is it dipped down for a bit here and then flipped it back up. But overall, it's still neutral. It's not dramatic enough to make a difference. So with declining open interest and also relatively neutral funding rate, it's not going to make that big of a difference. What does make a difference is this declining demand here. Is the blue line here. This signal, this indicator is for CVD, aggregate CVD across different exchanges. And you can see the declining demand on the blue line. There's not a lot of demand right now. And that's significant. So let's go to the next chart. Here we're going to take a look at a few things. This is Levitas, and this is free. So take a look at it, levitas.ch. You can see up here on the domain name there. So let's take a look at Max Pains. Max Pain, they were estimating around 42,000, but it did not get close to there. And we're going to see how Max Pain has changed. And Max Pain, as most of you already know, it's where the price tends to gravitate toward in a less volatile environment. But we're in a very volatile environment right now with Ukraine and Russia, etc. Oh, I just ate lunch. Oh, okay. On the 19th, Max Pain would be 41K. See here. It dropped from 42K. On the 20th, it's 40K. Again, that's we're heading downward here, which is more realistic to where we are, and that's why it changes. On the 25th, it's 41K, and 25th is where we have higher open interest when it expires. So that's a day to keep an eye out. That's by volume. That's not open interest. That's by volume. I'll show you open interest in a little bit. And on March the 4th, it's down. It's back to 42. March the 11th is 42. March 25th is 42. And so I'm not going to go further. Feel free to do that. They have a few more up until December, but that's so far away that it wouldn't make much of a difference as prices will change. So roughly, basically, it's between 40 and 41 in the next few periods here. And let's take a look at the where we're going to have some high open interest expiration. That should be marked by what? So on the 25th, right here, it has high open interest. On the for February and also for March the 25th is the highest open interest for this period. So those are the 2 days you want to keep an eye out for. Let's go back to my custom dashboard here. So next we want to take a look at the BTC open interest weighted funding rate. And I showed this yesterday and several other times. You can see in the last more of 24 plus hours, it's been declining. The red is the price. The green line is the open interest weighted funding rate, and they both were going down together. They normally have a divergence, and that's what we want to look at. So when they go down together like this, sooner or later, the divergence is going to happen. And you can see that here. Price continued to drop as the open interest weighted funding rate went the opposite direction. The zero line right here is the line that we want to look at for the weighted funding rate. So when the funding rate dropped, the green line, funding rate dropped below zero, you can see it bounced down to here, and it oscillated back up. And that's when the divergence took place. Sooner or later, it will do that. And so it went back up here, and price continues to drop. And you can see that the recent high was up in this area right here, which is, let's go to this one. That funding rate was 0.0105, and we have a ways to go yet. So it can continue to go up higher here, and then as price continues to dive. Or it could go back down and price go back up. But given the macro environment right now, more than likely, a price may continue to the downside as this continues the upside, or it could go a little bit sideways. Let's go to, wow, that doesn't look very nice. Something else I haven't shown you, and we'll dive more into it later on in the series on options, but give you a quick glance at this chart here. I'm going to do this chart first. This is the BTC Gamma exposure, short for GEX index. And before we go, I want to let you know what gamma exposure is. It's a little complicated. The Greek math, which is what these things are, gamma, delta, etc. It's a little complex, but to give you just an idea of what it is, and I'll dive more into it in the course on options. But gamma exposure is an estimate measure of the overall options market makers or the options dealers' exposure to options, Greek known as gamma. Gamma exposure is an estimate that can help you gauge future volatility and stock price, in this case, Bitcoin price variance. Gamma exposure informs you how the options market makers will likely need to hedge their trades to ensure their options book a balance. Okay, so just tuck that in the back of your mind. Don't worry about it if you don't understand it. It's a little complex to explain, and I'll do my best later on, but not right now. That's not the point of this. What we're going to go back to do is take a look at just the graph. And let's take a look. And I think I want to show you, let's go back a little bit. Gotta zoom out so you can see a bigger trend line and then just the lower time frame. So we're going to go and do, let's go back to December 1st. And then we'll end up with today's date, which is the 18th. This way you get a better idea what it looks like. Okay. So right now you can see that the red line is the GEX, gamma exposure. Okay. Don't worry about the median for now. Just look at the graph. GEX is dropping. The zero mark is right here, this line right here. Okay, that's the zero mark. And the green is the index price. That's Bitcoin's price. Bitcoin's currently at, you can't see it over here because it's cut off. Let me see if we can. Nope. That sucks. Okay, well, we'll work with it. Bitcoin's at roughly around 40, let's say. Okay, it's usually displayed on this side. So observe that the red line, which is the GEX, it dropped from up here where it was at 77,155. Okay. Right, you can see here the numbers right here, the scale. Right, it dropped from there down to literally it's like near zero right now. So just assume somewhere near there. and Bitcoin's price is around 40. Okay, so let's go back. Let's find another period where it dropped. Okay, so here it was high up here, and then you can see that it dropped to 0. So we want it dropped to, where is that here? Let's do this one. This one's easier. So here it's up high, the 0 marks here. It dropped to 0, and you watch what it does to the price. As it dropped below 0, price decreased. See that? Price was right up here, and price went down this way as the red line dropped. Okay. Let's find another. One. This might work. This one will work. Right here, the GEX is at 0 right around here, right? Price is up there. Price is up here. And as it dropped down, price went down. Okay, as it dropped below 0. As the GEX dropped below 0, price went down. And you can see that over here also. Here it's near 0, it dropped below 0, price dropped also. And you can go back further and you can take a look. But that's what may happen. So that is this is a chart that you can keep an eye on. And how do you find that chart? Is under, I'll show you how to find both of these, but let's go through this one first. This one right here gives you additional information. That's pretty cool. This is also the gamma exposure, but it does it by the what is it called? Oh man, what's the word? Escaped my mind. Let me go back. Hang on. Options. Let's go to there a bit. By the they changed the. Hang on. Activities. Might as well. Oops, something changed. Hang on. There a bit. Thinks is under volatility. Maybe not. Nope, I don't think so. Hang on. Where did I find that? It's not there. Analytics. Yeah, sorry, here. It's under, you can go through different exchanges, but this is through Deribit. It's under analytics, and the two are here. This is the make sure you're on the analytics, and you can see here this one over here is BTC gamma exposure GEX index. That's the one we just looked at, and this is the gamma exposure showing all expirations, and the x-axis is the strike price. So we'll just go in there. So the strike price, what's interesting here is you can see there's this long, so puts are the red right down here, calls are the greens. So there's this large line right here, and that line is at 40K. Guess where Bitcoin is at right now? 40K. So this tells you that there could potentially be extreme volatility in this area as the options dealer try to balance so that they stay balanced at neutral, if you will. So 40K, that's where we are. Extreme volatility to be expected. And if you expect extreme volatility, you combine that with the macro environment, price could go down, like probably into the mid-30s or 38, 36, 35. And we'll take a look at the heat map again to see where that is. So something to keep in mind. I thought I'm logged in, buddy. What's going on? Weird. Okay, so we covered this chart. We covered this chart. we cover, I don't think we covered this one yet. Let's go to this one. This is the BTC open interest weighted funding rate. So let's check that out. Oh no, we covered this. I think we covered this. Yeah, we did. So we could pretty good here. Cover most of, I think all of the charts I wanted to cover. The last thing I want to cover is basically the, actually second to last, is the high block capitals liquidation levels. You can see here the cumulative liquidation levels delta is negative 5.58 billion, and this is only measuring high leverage between 25x and 100x, and this just means that there are more shorts as far as open interest to liquidate at those high leverage positions. Price is currently in the dash line right here around 40k, and moving down would liquidate the longs. Moving up would liquidate the shorts. So all these high levels right here, these are all 25x to 100x, and that is measured here with the overage. So you take this, all this open interest up here, minus all these open interest down here for longs, you get this red area. So what is the incentive? Obviously the incentive, if the market was like not macro, filled with macro FUDs, the tendency would be for the market to move up this way as smart money take the opposite direction as all these shorts here. They to go long on high leverage, move the spot price to, and then the perpetual futures price will follow, liquidate all the shorts they collect on their high leverage positions, and these people lose. But more than likely, price may go choppy, but if pressure in the macro environment with Russia and Ukraine, if that pressure continue, what we're going to see is price drop down to this way. So here's 38 right here. So potentially price could drop down and clear all these longs right here. Okay, but it could likely go back up if the tension with Russia and Ukraine and the West ease up. Price could easily move back up and clear all these guys right here. So right now, more than likely, it may move down or maybe go choppy. Choppy chop. All right, let's take a look at the heat map and see where some of these walls are on the update. We have a sell wall here at 45K. That's strange. That just came in somewhere back here. Yeah. So for 45K is right here. Not much else in between. And let's go down below. We have some light walls here. If you zoom in, you can see them more clearly. I think I'll do that for you. Not I think. I'm going to do that for you. I don't like using tentative languages. So currently we're sitting at 40. We're going to range at 40 for a bit. This was roughly 40.7, which was a critical area. We range there. We drop, range here. If we continue that pattern, we probably drop and range down here somewhere. So here's where we are. We're going to call out just the big walls only. 39.6 is this wall right here. And that's probably is to prop up the price here. You see that price went down. 39.6 held its line and then absorbed some of it. Price bounced back up. Price bounced down again. It stayed. So this wall is solid. Some of it may move, but the majority of it stayed. So that's good to know. But that's only 116, pretty small. Down below that we have 39, and that's roughly 104. And we have some spoof walls down here still, but they look like they disappeared. 38K is right here, and that is 175, I think. Yep, 175. And down below that, we have one at roughly 37.3 right here. Down below that, we have a thicker wall or multiple walls that squish together between 36.8 and 37. And down below that, we have a really thick wall here between 36.2 and 36.6. And that's pretty big. Okay, let's go down. We have two little ones. You can combine them if you want, around 35 and slightly up. We have 33 and 32, 31, 30.4. And our big one right here is the 30K and slightly above 30K. We have one at 29. Man, they're coming in. 28.5 roughly, 28 here, 27 a little, one at 27. 25, we got one at 25.5 and some change. 24. Yeah, they're filling up here. 22, 21, and then I'm gonna stop at 20. 20, so okay, fine. We're gonna get some at 18, some at 17.5, some at 17, and that's it. I'm not gonna go any further. So the walls on the bottom, buy walls on the bottom, are building up again, unlike before. Well, that's not how far I want to go. 0. I always laugh at that wall. Okay. So let's summarize. Let's go through and summarize some of these stuff here. If I can find it. So basically on this chart right here from coinanalyze.net, open interest is dropping. The funding rate is relatively neutral. Price continues to drop. Not much to say here, but you got to pay attention to the demand. Demand is dropping, continue to drop. Over here on these charts over here, this looks so funky here. On these charts, February the 25th and March the 25th are the days to continue to pay attention to. Max pain roughly has dropped to between 40 and 41 in the near term. The open interest weighted funding rate, it shows that they have diverged again, and potentially there's more downside, but it could very well go up. The 40K price level is an area where the gamma exposure is of interest, because there's a lot happening there, high puts and also high calls there. Let's see here, and you saw on the gamma exposure index, this chart here, that there's potential for downside if the GEX drops below 0. Okay, that pretty much covers our derivatives, options, and perpetual futures. Appreciate your time. If you found value in this video, feel free to oh yeah, I forgot this other chart. Excuse me. I want to make sure you get it, get the other summary too. Yeah, this chart. There are more shorts, open interest here at high leverage position. Could easily move up to get rid of them, but more than likely with the macro environment, price could continue to move down. With that, again, appreciate your time. Feel free to hit the likes, ring my bell, hit subscribe, and leave a comment. Appreciate it. I'll probably see you again later today. If not, for sure, tomorrow. Peace.